Hey folks, welcome back to this edition of Ben's Bits. We're continuing discussing the topic of retirement and how the investment vehicles you choose have a direct impact on your portfolio. And remember, the objective of this series is to reveal if the investment vehicles that you've chosen are moving you closer to your goal or in the opposite direction. And more importantly, at what pace. A more direct statement would be when you look at your portfolio as a whole, are there any investments that are inhibiting your desired outcome and making you take longer to achieve that goal? And if there are, what steps could be taken to alter that course and accelerate that time frame? Last week, we discussed the idea of mutual funds and how they affected a portfolio regarding the risk of your capital and how much that you needed to deploy. We had a lot of great feedback from it, and it seemed to generate some very good discussion points, which of course is the secondary reason of these videos. The first is to put the information out there and really challenge the status quo, as it were, challenge the thinking that's behind it. So today we're going to be discussing how it's costing you money by not deploying funds that are boarded. Or another way of saying it is having your capital parked at a firm specializing in retirement accounts, IRA companies, for things of that nature. And there are a few of them out there, and we're not going to be promoting any one over the other, but we can recommend a few we would, for lack of a better term, endorse. So just reach out to us if you'd like that resource. That said, you know what's really interesting when you look at the typical retirement account at any of the major retirement management companies, there's a range of about 20 to 25% of the funds boarded at those firms that are just sitting there, and they're losing money very slowly because the typical investor isn't deploying their capital stack into an investment that's generating some type of return. Now, we understand it's because most people either don't know what asset to invest in, or they're just too scared to deploy because of uncertainty in the marketplace. And we're on friendly terms with a few of the major players in that sector. And one company in particular tells us that at the time of this recording, they have over $2 billion under management. And nearly 20% of that capital that's being boarded there is not being utilized. That's astounding when you think about it, because there are so many great assets out there if you know where to look and if it falls in line with an investing strategy that fits in line with your investing philosophy. And the point that you must understand here is this: there aren't any advantages of parking your money or boarding your money in an IRA if you're not going to take advantage of investing it in an asset. In fact, you'll lose money by not investing it for a variety of reasons. And listen, I get it. It's widely understood that people have the best intentions of investing their money when they open an account. But you are losing money every month that you fail to deploy that capital. And look, it's no secret that we love notes because they offer a more secure position in an investment than the traditional real estate vehicles that exist. That's why we have a whole series of notes versus videos that explain why we believe they're the best investment for anyone's portfolio. And if you haven't viewed those, that informational series, I highly recommend you do, because it'll be worth your time to see why the wealthy have notes as a considerable portion of their portfolio, especially to those of you who have capital in an IRA. And if you want to find an investment vehicle that gives you more every month with a higher velocity than the traditional route, it'd be worth your time to check out. So that's it for this edition of Ben's Bits. And as always, thanks for watching, and we'll see you next time.